Hi, this is Tony Carrion. I want to share with you a clip that was recorded July 2nd, 2020, when NEO was trading at about here at $10.29. Now, from July 2nd, when the video was recorded, up until September the 18th, NEO advanced nearly 152% before running into a second wave correction. That correction set up another upside opportunity that up to this 55.21 high was a move of more than 352%. In the upcoming video, you'll see and hear my entire thought process as I analyze this market in real time. It's a good example of applying a wave count, starting with a blank chart, and shows you how Elliott can help you anticipate trends and trend changes. I hope you find it helpful. Okay, so now I want to see if you can put your wave knowledge, what you've acquired so far, to work in helping me to label this chart. Okay, now this is a cryptocurrency called NEO. One thing I forgot to mention before that I'll mention here is that with the cryptocurrencies that we work with, we try to stick within the top 20 cryptocurrencies by market capitalization. And there's an excellent website called coinmarketcap.com that ranks the top 100 cryptocurrencies by market capitalization. And so I like to stick within the top 20. And so NEO is actually within that group. I believe it's number 20. It is something worth taking a look at. But right now, there's no labels. This is an unlabeled chart. So let's just, for the sake of this exercise, say, okay, you're looking for a crypto that you might want to get into, and you come across this chart, okay? And we see this nice rally here that has unfolded. So is it something at first glance that we might want to get involved with? Any thoughts? Well, I would say you piqued my interest, okay? But I'm not going to get involved with this until I know a lot more about what is going on here in terms of daily wave pattern, in terms of any technical kind of analysis. Right now, as I said in one of my videos, I want to know the backstory, okay? I want to know what happened before, this part of the chart that I'm looking at, okay? And the reason for that is because I want some context. I want to have sort of the broader context for any trade that I might take. All right, so let's back this out to a weekly chart. And so what do we see here? We see a very, very large and substantial correction that ended, or that appears to have ended, here down in 3 waves. And so I want to know how much this is given up. Okay, so let's try and get some price labels on this. So at one point, its peak, this is trading at $198, okay? At its trough, it got all the way down to 4. Okay, so this is a massive correction, on the order of a bear market. So there's a possibility then, if we're thinking about trading this, which at weekly scale doesn't look like a whole lot right now, but it could signal the end of this whole bear market correction, okay? And it could be the first wave up, within a whole new bullish advance. Okay, so let's go back down to the daily chart. Okay, so the second thing that you want to ask yourself is, do I see a pattern that I recognize? Okay, Now, with all that you've learned about the Elliott wave principle in terms of patterns, key levels and things like that, and technical indicators, is there something that you see here that would induce you to get involved in this right now? Okay, well, let me cut to the chase and tell you my opinion right now would be no, not yet. Okay, because I think that there is the risk of a bigger correction. So let's look at a couple of the technical indicators that I talked about in one of the videos. Okay, I referred to the ultimate oscillator and the money flow index, right? So this is giving me a picture of the overall momentum within the current price action at a daily scale, and the money flow index, which is giving me an indication of volume, or what is the underlying volume trend. Okay, and so what do we see here? We see the ultimate oscillator turning lower. Okay, we see the money flow index turning lower, which is telling us that buy volume is starting to dissipate. Okay, so this is already a warning that the one thing we don't want to do right now is to take a long position in NEO. Okay, now let's look at the wave pattern, because the technicals can help to confirm a wave pattern. All right, now I do see a 5-wave count here, all right, or a pattern that we can count in 5 waves from this low up to this high. Now we see some choppy price action here. We don't really see a classic kind of 5-wave impulse. But that doesn't mean that it is not a first wave. All right, so since you're new to all of this, I'm going to go ahead and start labeling what I think is going on here. Let me move this thing out of the way briefly so I can access some of my tools. I just have to open it up again. So let me first draw some trend lines here, okay? Now, I think what this first move up is a leading diagonal. Okay, and so in a moment, we're going to validate that it is a leading diagonal. Let me close this back up again. Sorry. Okay. Want to create some more space here. There we go. All right. So a leading diagonal or any diagonal or contracting type diagonal has certain rules. Okay. So let's consider what the rules are. Actually, I think this is maybe a little too far. Not. Okay, so within a contracting diagonal, in this case, a leading diagonal, wave 3 should be shorter than wave 1, and wave 5 should be shorter than wave 3. So let's see if that's so. So we'll use the tool and this charting software. In the old days, I would have had to print the chart out and measure everything manually. So it's kind of nifty to have this kind of an aid. So indeed, this is the level where wave 3 would be 61.8% of wave 1, so it is indeed shorter, and it didn't even make it to the 0.618. Okay, so now let's check and see if wave 5 is shorter than wave 3. Okay, and indeed it is. For it to have been of equal length, it would have had to have gotten all the way up to 842, which is indicated by this blue line here. So far so good. Okay, we can label this as a leading diagonal. So let's go ahead and do that. So we'll start out labeling the internal count of the leading diagonal. And one thing I'll note about leading diagonals is that they also tend to show up a lot in the cryptocurrencies. Okay, so this is our wave 1. And this is 2. And this is 3. Then 4. Then 5. Which are all the subwaves of this wave 1. Now remember that a leading diagonal can only occur in the first wave position or as an A wave. In other words, it's called a leading diagonal because it is beginning a pattern. Okay, as opposed to ending diagonals, which, as their name implies, are ending a pattern. Okay, so we have waves 1 and 2 here. So now what else do we see? Okay, what has followed this? Well, what has followed this is a 5-wave pattern, right? 1, 2, 3, 4, 5. Okay, so we can consider this to be wave 3 of this advance. And let's add the wave 4. Actually, I'm going to put wave 3 here. Okay. Okay, so now we see 1, 2, 3, 4, 5. Let's go ahead and put the subwaves there too. Why not? So we can be more certain. Okay, this is wave 3 of 3. Wave 4 of 3. And wave 5 of 3. Okay, and then we have kind of a sloppy looking impulse pattern that emerged off of this low. So we'll consider that to be wave 5. Okay, and we're going to count this total move, since we can count 5 waves up off the $4 low, as wave 1. Okay, and this peaked at $13.18 from $4. So if you'd have spotted this earlier, it would have been a nice trade. Okay, so now what has followed the peak? It looks to me like 1, 2, 3, 4, 5. Okay, so we've gotten a correction here. All right, and as my colleague Michael Madden would do, he would draw a trend channel. And notice how the lower boundary of the trend channel contained pretty much all, except for very little of it, pretty much contained the most of the price action during this advance. And so now what has happened? Okay, we've gotten a significant break beneath the trend channel. Okay, so that's also another clue that we have begun a correction. Okay, presumably within wave 2. All right, so if we can count 5 waves down, all right, and let's put the subwaves in there too. So now here we have the 5 waves for wave A. Okay, and we have the 3 waves for wave B. Now let's just look at where wave A terminated. Okay, here at 972. And notice that the prices return to right within that level. So it could mean that wave B is finished. So we can consider potentially that a top is in place for that wave B. Try that again. There. Nope. There we go. That's what we want. All right. Okay, so now if wave B is complete, which it possibly is, we already have the 3 waves for it. We want to consider then a couple of things. Nope. There we go. All right. Well, first of all, if wave B is finished, then one thing that we don't want to see is any price action above the wave B high at 1130. Because if we got a reversal above that, then that would mean that wave B didn't finish. Okay, the second thing that we want to see in order to confirm that this wave C down is on the way is a break of the wave A low at 972. Okay, so if we got a nice solid break of that level, then that will tell us that this wave C decline should be on the way. Okay, now, again, say if you were to short this, you would use the break of 972 as an entry, and you would put a protective stop that's above the wave B high. So this is 1130, so maybe 1140. Notice in order to protect your position. Or also you can try to calculate where this wave 2 correction might end, because remember, what we're going to go for here is the wave 3 rally that follows. Okay, so we want to have an idea where it could end. Right, so one thing we can do is we can use a Fibonacci retracement. Okay, so interestingly, wave A ended at the 0.382 retracement, but obviously this correction isn't finished. Okay, so that means that it could end at around the 50% retracement, possibly, which here is at 859, or down at the 0.618 retracement at 751. Okay, so these are possible downside targets for wave C of 2, or all of wave 2 for that matter. Now, another technique we could use, and let me just take the Fibonacci's off for a moment, is we could use the relationship between wave A and C. And remember, I mentioned that in our discussion about EOS, which we looked at a little bit earlier. So let's see what that relationship would be. Again, this is on the assumption that wave B is already complete and we're in the early stages of wave B, which I think is possible, but that is still subject to being confirmed by a break of 972. All right, so we have a bunch of different targets here. Let's focus on those that are most typical, where wave C is a 0.618 multiple of wave A. Well, that could produce a low at 916. If it is of equivalent length with wave A, that could produce a low at 784. And if it were very long relative to wave A, if it were a 1.618 multiple, that could see the price getting all the way down to 570. Okay, so now you know why I said before that we didn't want to jump in on a long trade just yet. First we wanted to let this correction happen, and then try to pick our spots. Okay, so now these do coincide somewhat with the Fibonacci retracement, so I'll bring that back. And let me just switch the direction so they're not all bumping into each other. Okay, so here we have the 78.6%, or rather the 78.6 multiple, which is another possible relationship between wave A and C. All right, that kicks in at 858. Okay. Now the 50% retracement, as I said before, is 859. So we're talking about a very, very slight difference, and so that could be a potential target. We have two measures that are pointing to that as a potential target. That could be where that wave 2, the pattern completes. Here, the 0.618 retracement and the 0.618 or the equivalency multiple, the equality multiple for waves A and C, all fall within the $7 range. All right, the 0.618 at 784 and the equality multiple, actually a little bit lower, actually 1.236 multiple, I'm sorry, is at 702. But basically we have three targets in the $7 range that begin at 784. Then we have 751 as another possible target, and 702 based on using the 1.3 or 1.236 multiple between wave A and wave C. Okay, so we have another set of targets within the $7 range. So I would say that probably it's a good bet that this wave C of 2 is going to end somewhere between $7 and $8. So as this correction then proceeds, we'll be looking, for a low that happens in one of those two areas. If we get down to the $8 range and keeps going lower, then we might start looking at the $7 range, okay, where we have both Fibonacci support and Fibonacci multiples indicating a potential area for a low. All right, so our point of view then, again, if we're not shorting, if what we're looking for is to prepare to jump on board wave 3 when it gets ready to launch. So we're going to want to start picking our spots. Now, right now, assuming wave C is on the way, we really don't have very much of it at this point. Maybe this is wave 1 of C, maybe wave 2, and we're starting to move lower within wave 3 of C. All right, so then we're going to want to wait for 5 waves to unfold, just as we waited for 5 waves to unfold for wave A. Okay, so this larger corrective pattern is suggesting that this wave 2 is taking the form of a zigzag, right? And zigzags are very, very common within second wave corrections. So we would first be looking for 5 waves to complete for this wave C before we even think about taking a trade to the long side. And then as far as once we can count 5 waves down, then the next thing we're going to be looking for is 5 waves up, right? Because the 5 waves up will then signal the change of trend. Okay, so we get 5 waves up, then we would expect a pullback as long as it doesn't exceed the low of wave 2. Then we have good evidence to consider that wave 2 would have bottomed. All right, so then the next thing we're going to look for is an entry trigger. Okay, so that could be a break above the previous fourth wave level of wave C. And I realize that, I'm asking you to use your imagination here. Because, obviously we don't have all the wave C in place quite yet. But as far as entries, well, let's look back here, okay? Let's say, we wanted to get in early on this move. Let's say we found maybe everything just up to this point. Okay, so we were able to count a leading diagonal, all right? Then we had the second wave pullback, right? The second wave pullback did not exceed the low of wave 1 at $4. So that was a good bet that we could move higher. Okay, so we could have used, in that case, we could have used as an entry target a break above the wave 1 high and set a stop just beneath the lower of wave 2. Okay, and so we would have looked for 5 waves to unfold, as happened in this particular case. All right, I talked about trading fifth wave rallies. Okay, so here we could have gotten in awaiting a break above what would have been, say this is an ABC decline, above what would have been the wave B high as a point to get in, all right? Or awaited the pullback, the first wave pullback, and make sure that it didn't get beneath the wave 4 low. And then we would be in, okay? So we would be using a process similar of picking our spots as far as where we might want to get into the start of this Wake 3 rally.